But over the years, though, we've heard all sorts of buzzwords like green, environmentally friendly, sustainable, equality, etc., etc. Call me skeptical, but what exactly is responsible investing? Isn't it just more of the same thing? It's something that sounds good, but at the end of the day, it's just a ploy to get people to go out and buy more stuff.
A great question, and I think unfortunately there are lots of buzzwords, and they do mean different things, and people use them in different ways. The framework that I like to use is a sort of spectrum of capital, and at one end is ethical investing, and ethical investing involves divesting. And so an ethical investor says, I don't like tobacco companies, so I will hold zero tobacco. I don't like oil and gas, so I'll hold zero oil and gas. In the middle is responsible investing, and that means that environmental, social, and governance factors are both a source of risk and a source of return. And that's where we sit, and I'm going to come back to that. Then you have impact investing, where you might want to be driving a certain impact and you're prepared to forego some of your financial return. So you still expect a financial return, but you're prepared to forego some of it. And then you can go beyond impact, and you might argue, you're going into sort of charity and philanthropy. So responsible investing is that kind of first cohort. It's not ethical. It's not divestment. It's all about engagement. It's all about seeing environmental, social, and governance as both a source of risk and return. It's about using our size and scale to make businesses better. And I'll give you an example of that. And crucially, we think that this will deliver long-term performance and a better outcome. So research done by MSCI over the last 8 years has shown, so if you take the ESG ratings of their stocks and their indices, so it's over 4,000 stocks, and you compare the top 1/3 with the bottom 1/3, not only have and this is by ESG rating, not only have the top 1/3 performed better in terms of share price, and you could say, well, that's just because all these people have come in and invested in that and it's been a bit of a bubble. But actually what you see is that their earnings growth is significantly higher for the top 1/3 than the bottom 1/3. And so what that's telling you is at a fundamental level, companies that have good environmental, social, and governance policies have superior underlying financial performance. And so let me bring that to light. We should be invested, so we are invested in the oil and gas sector. And if you look at how much we should have based on benchmarks, we should have about 3.5%. We actually hold 2.5%, so we're underweight by 1%. When you drill down into that, we own 430 million pounds worth of Shell shares. We own 350 million of Total, and then we own a little bit less, 350 million of BP, and then we own a little bit less of Total. We don't own any Chevron, any Exxon, or any Gazprom. Why do we own Shell, BP, and Total, and not Exxon, Chevron, and Gazprom? Well, the truth is that Shell and BP and Total have signed up to net zero. They acknowledge the Paris Climate Accord. They acknowledge the need to transition to a 1.5 degree C world. And they have pivoted from being an oil and gas business to a business that is focused on delivering the energy needs today, tomorrow, and in the future in a sustainable way. Because of the way we engage with our fund managers, and our fund managers engage through organizations such as Climate 100, we had an indirect impact on businesses like Shell signing up to net zero. So that is a great example of your money being used as a force for good. We're not trying to divest from Shell or BP. We want to see them to succeed. These have been companies that have been around for a long, long time. They are very good at operationally running their business. We just want them to stop extracting oil and gas out the ground. And we want them to take their know-how, their culture, their people, and find a way of meeting the energy needs of the global economy and the planet in a sustainable way. Another good example is Coca-Cola has reduced the amount of sugar in their drinks by 50% over the last decades. They're finding new ways to get their product to market, so not using plastic bottles. An example I use is Levi Strauss has reduced the amount of water they use in their manufacture of their jeans by 96%. Molson Coors that makes beer has reduced the amount of water it uses to make beer. More and more beer companies are going carbon neutral. So I suppose what I'm trying to communicate to you is that this responsible investment, this integration of environmental, social, and governance makes companies better in the long run. Again, a few years ago, Volkswagen had governance issues. I don't know if you remember, but they were basically fiddling the emissions on their diesel cars. VW now looks like it will be one of the largest and most successful electric vehicle companies in the world. By 2025, they will have more models of electric vehicles than Tesla. They already are going to be the largest manufacturer of electric vehicles in Europe. And they just announced a deal where they're going to also become a massive battery player in this space. And you will have also seen that BP has just entered a strategic partnership with VW, where BP is going to be the supercharge provider for Volkswagen cars all over Europe. So again, hopefully that brings this kind of idea that you can have your cake and eat it. You can deliver long-term superior investment performance whilst at the same time making companies better in terms of how they operate and their impact on people and planet.